All right, so welcome to another video. Today, what I want to do is share with you a bullish diagonal spread construction on a trade. We're going to do a Zoom. And again, keep in mind that there's not a recommendation to buy, sell, or trade anything, just my own personal opinion and some insight for you. If you want to go ahead and get some of those insights, then definitely check out the Discord channel. There's a lot of things here that I chat about. There's also some stock movers that I'll post periodically from time to time. You can see support, resistance, and that kind of stuff. And then also visit the Traders Fly website. The link's going to be in the description, of course. And you can also check out some of the upcoming live classes that we have coming up. So anyways, let's get started. I want to show you a bullish diagonal construction on Zoom. Before doing any kind of trade, you always want to check when the earnings are. So in my case, this one, the earnings are 6/7/2022. So it's for a while. And because of that, we have some time that we can do a bullish construction on it, or we can do a trade on it. Otherwise, doing it through earnings, it's a little bit more difficult because then it has to then be in part of your longer term investing strategy. And that's okay as well. But you have to be aware of that. It could whip around during that time frame. So the reason I might want to do a construction on Zoom is if you look at the IPO way back here, we've got kind of resistance and then a huge breakout. And then this stock's kind of coming into that $100 price spot. So this could be creating some kind of bottom. So you're looking at, hey, are we coming into the bottom? I'm looking to kind of buy the dip. And we've been kind of going down, but now we're starting to go a little sideways. The other thing that I like about doing this construction is we've had some good volume coming in right here where the stock bounced right at the 100. So that's pretty nice and positive. And another thing that's related is looking at the strikes. So when I look at Zoom, one of the nice things about this is we have $1 increment strikes. Sometimes when you see these kinds of things or these stocks in this range, it could be $5 increments. It could be, and that could be a little bit more of a pain to trade. So because this is $1 increments, what I could do is actually really tweak my risk depending on my personal needs and desires. So I could go ahead and let's just first start out with buying a calendar at the beginning. I'm just going to go ahead and buy a calendar to start. And you can see right here, the calendar is kind of right at the money. I'm selling one. The one that I'm selling decays faster than the one I'm buying. And that's what the spread construction is. I'm all at the 112. So that's the basic premise behind a calendar. So in order for me to tweak this, all I'm going to do is switch it to a custom. And I'll just go ahead and move this, one of the strikes, to a different strike. And now I've got myself a diagonal, and I can switch it back, and now I've got a diagonal. So now I will unlock the price, and you can see I've got a diagonal construction where now I've got a little bit more positive deltas for a possible upside move. And what's great here is I just did a tiny rotation rather than kind of a big rotation when it comes to doing a diagonal. Sometimes you go in and you do one little tiny rotation and it just goes pew, and it rotates huge in a big way. But here I could actually rotate it just very gently. And that's what makes it nice. And if I want to scoot it up a few strikes, I can also do that as well, where I could be a little more bullish, or I could be a little more bearish, or less bullish. So I could do something like this, or if I want to go ahead and do 2 points, I could do 2 points where I could have a nice kind of upside move, or I could even bring it back. I could say, okay, 108 and 110. And now I've got a little bit of a larger rotation, but I'm more deeper in there. So depending on what you want to do, if I want to go in and say, hey, I'm extra bullish, then I will, or let's just start this way. If I'm very cautious, I will do something more like this, where I'm bringing it closer, or kind of like selling a put vertical. I'm going wider than the current position is. So it's kind of like selling puts. So I'm selling puts all the way over here. And this is kind of the puts I'm selling is over here, and I'm buying some protection. So there it is. There's kind of like your vertical, except with a diagonal, you got a positive vega here, and it kind of functions a little bit differently. So here, this will help me on the downside, but I've got kind of a vertical put setup and construction here with a 2-point wide. So if I'm extra cautious, I could do something like that. If I'm less cautious, I could start moving this up and going 111 and 113. And now I'm less cautious. I'm a little more, shall we say, slightly neutral, but a little bit more bullish. And now if I go in and say, okay, well, I'm going to be more aggressive, I could do something more like this, where I'm almost at the break even right here, and I've got a lot of range on the upside. The downside is when it gets into this, I start losing some negative theta. Now, it's not to say on the other ones you don't lose money, because even if this pulls back, you know, you could be down $40. But same with the other ones. Like, you know, if they pull back right here, if they pull back and they pull back quickly, you could still lose that $40 even though you're in that expiration time. It's just that this one, when you're a little more cautious, your deltas are actually going to be a little bit weaker, and that way you're also going to have that expiration area kind of still supporting you a little bit. Whereas if I go a little more bullish, like let's say 116, 118, now I got even more deltas. And with more deltas, that means if this pulls back, I lose more money quicker. So between a 3 delta that I had before, and now I've got a 5 delta, this one is almost double the speed from a delta perspective. So if I want to do something like that, I could actually just reduce it to going to 1 point difference. And now I could have a very cautious construction, because the market's been iffy and weak. I could do a very cautious construction for a diagonal spread when it comes to Zoom, because we're looking that it's bouncing at around 100, but this still has a lot of room here down on the 100, and I could still lose money on it, but I'm just tweaking it lightly, positioning lightly in order for it to possibly pop sometime in the next, 20 days. And with time, I will get some of that theta. So as it kind of continues to decay, and if it goes up, you can make about $40 and you're risking about 130. So if you take out of your calculator and you go in, you say, okay, well, I'm making $40 on about 135. And you look at it from a percentage basis, that's about, call it 25% after some commissions and so on. So anyway, so this is where these trades excel really well. And you don't want to use a lot of capital because you are leveraged up a little bit in here compared to doing the stock on its own. These are leveraged, so you want to trade a little bit lighter here than you normally would. But setting up a trade like this could be nice, where it's just, hey, let's just take a little bit of a position size on it. We're going to go ahead and put a tiny position on, let it kind of work. Here I've got the put side, and if I am bullish, I'd probably just do the call side. Not that it matters too much unless you're holding towards expiration, but we'll go ahead and go to call side. Sometimes the call side's also easier to get filled, just simply because it's there's just more people trading it. But here, call side on the upside. So I'll go ahead and try and work that trade. I know Zoom, from personal experience from a live account, it does take a little bit of time to get filled on these. So be a little more patient, because just like Etsy, they're not as liquid as maybe some of the other stocks. So just be a little bit more patient with Zoom and just bump it up like, 5 cents every 5 minutes if needed, if you don't get filled. But let the stock kind of work and the trade work. You can see I'm kind of rushing it and pushing it a little bit on the trade. But if I do that, that also means I could get a bad order and a bad fill. So if you're doing this too quick, you can get burned very, very quickly. So be careful. I'm already at $1.60. It's trading at $1.37. Normally just let it wait, but I'm going to go ahead and try and keep pressing it a little bit quicker here for the video. But normally just wait, be patient, let that trade work. And here what I'm doing is I'm selling the 31-day, buying the 38-day. I'm doing it, one wide, really, not even 2 wide or anything like that. Something very simple, a little more cautious. All right, so I'll just let this go. Oh, there it is, get filled. I was going to just let it go because I was just starting to be the point of overpaying. And this is the good lesson right here, where if you go in and you see that you've paid and you've kept paying up and you're paying up, and because of this is a video on the paper platform, it just shows you're going to start down $32 right here because I kept paying up. And then the market makers take the difference there, and basically I start out with a loss. So this is why you don't want to push that order too quickly unless you really need to kind of get out or really need to get in for a certain reason. So in either case, right now I'm starting down, and it's not what you really want, but we were pushing the order. And that's what I want to share with you, is that just, hey, be patient, allow it to fill. But now we've got this trade set up. So it's going to take a few days for me to just even make up some of that difference on this kind of position, but Zoom I know is always a little more tricky to get filled. Similar to Etsy, I've always struggled with Etsy. Daku as well is a little bit more of a tricky position to work through. But anyway, this is kind of the construction I would look at doing on this trade, and just kind of try and work the trade a little bit to make sure you get filled accordingly if this is something you're looking at. But I like stuff like that right now with Zoom, even things like Roku. But again, you want to check earnings. The only thing with Roku, if you go further dated options, you can see you've got $5 wide, and that's a bit of a problem. When you get to the shorter duration though, they do have the dollar wide right here, which is nice because then you can do a tiny bit of a rotation rather than making the rotation too big. So again, similar to that, you could do that similar construction on Roku because the position is also near that 100. Take your pick. The setup is similar, and you could do like $1, $2, and just kind of position it. You could even do a bearish if you like, and kind of tweak it to your personal needs and risk tolerance. Anyways, thank you so much for joining me. Hope you enjoyed this video, and hopefully I'll see you in the class next week on market seasons we have coming out. Enjoy the rest of the week ahead, and I'll see you next time.